Hello and welcome to this edition of Charting the Markets. You with me, Sean Murison, Senior Market Analyst at IG South Africa. Markets have now digested the news that the US debt ceiling has been passed through the House. Now we are waiting for approval from the Senate. The Senate shouldn't be a problem, seeing as that is mainly Democrats. So we don't have as much of a bipartisan issue as we did with the House. So moving on, markets will now start to focus on US jobs data. So this afternoon, we do have a precursor to tomorrow's non-farm payroll data in the form of the ADP, the private payroll data, out this afternoon. And markets will keep a close eye on that. We do also have ISM manufacturing data out of the US, the PMI data, which will also be something to watch just a little bit later. Looking at some charts and starting off with the US dollar, the Dixie or the US dollar index. We can see that range-bound environment of the short to medium term does continue. We have had that move, which we talked about last week, above 103.15, and that predicted a move to the next level of resistance of 104.35. We have just fallen short of that, and we are hovering around that. That level is acting as resistance. Now, we do still consider that longer-term trend for the dollar to be down. And we see the price trading below that 200-day simple moving average, blue line on our chart. And before we start really considering a new long bias, we want to see the price trading above that 200-day simple moving average and above this major high. Higher highs and higher lows make the building blocks of an uptrend. So that's when we'd start to consider changing our bias. But for now, we are watching this level, 104.35. If we do break above that, we'd look at our next level of resistance at 105.30. And at either of these levels, what we want to see is a bearish price reversal for possible short entry in line with that longer-term uptrend. If we don't get the reversal and we see the price moving above that, then we change our trend bias and reconsider what we want to do on the US dollar. But for now, that's how the picture is. Looking at the euro dollar, similar picture where we have this short to medium term strength in the dollar, but it's still within a longer term uptrend. So a longer term uptrend being a longer term trend of euro strength relative to dollar weakness. We found support here at the 1.0685 level. And we have this hammer type formation here, just an intraday reversal, yesterday's candle. These are obviously all daily charts. We want to see some follow through that before looking for long entry, strong close on today's candle. And today's price movement is actually very marginal at this stage. So if we do see a strong close, and let's say above that, the high of that previous candle, then we can say we have a bit of a bullish reversal at support and from oversold territory, in which case we start targeting a move back to 1.0855. Now this level does break. We look towards 1.0513 as the next downside support target. So instead we get a close below this level, which is acting as support. Then we look to that next level at 1.0513. Now the short term, the medium term is more of a sideways consolidation where we have a short term correction, but the longer term trend bias is still up. And only when we start breaking below this 200-day simple moving average, we say that longer term uptrend may be broken, and it is getting very close to that at this point in time. And certainly for some conviction that we might be starting a new downtrend on the euro dollar, we want to see a move below this 1.0513. But as it stands right now, the longer term trend is still up. It's being tested. We've had a short term correction, and we are still keeping a long bias at this stage until we start seeing both the 200-day simple moving average and that 1.0513 level broken. And that's obviously to the downside. Cable, pound versus US dollar. That longer term uptrend seems to be a little bit more intact. It is a bit cumbersome at this stage. We had that short to medium term correction, found support at a 1.2343 level. We did actually have a false break there, but the price has rallied off there quite nicely and from oversold territory. And that targets a move back to about 1.2543. If we can get through that with a close above, then we start looking at that previous high, that 1.2665 level. And traders who are long might consider having a stop loss on a close below that 1.2343 level at this point in time. If we did break that level, and we wouldn't be looking at shorting the market or the cable, because we are still sitting within that longer term uptrend, and as trend follows, we like to respect that trend. All right, moving over to some indices, starting off with the Nasdaq 100. That upside target, that 14,390 level, which we talked about last week, was realized quite quickly over the last couple of days, and we are now finding resistance at that level. So it's proving its relevance right now. And now we have stagnated, we have been laboring in overbought territory at this point in time, and now we are seeing a little bit of a correction from overbought territory at this stage. Preferred approach here is to wait for weakness to play out. see that weakness to play out, and at one of our levels to look for long entry, because we do consider that longer term trend for the Nasdaq to be up. But at this point in time, what we're doing is we're going to wait for that to see where this correction takes us, and if it actually does manifest. Alternatively, still on the long side, if this correction doesn't take place and we see a break to the upside, we could also consider long entry, although a bit more of a less favorable risk assumption relative to reward. It becomes difficult as to where to put your stop. But certainly, if we do get a break above there, then we start targeting our next level there, probably about 15,000. So we're watching this level. We're accepting that we are correcting a short-term correction of a long-term uptrend at this stage. And we're going to see how that plays out. Ideally, pull back towards one of our support levels for long entry. Nasdaq 100 trend is up, but we have been grinding over the short to medium term. We had this range we labeled before. We've now remarked, but we had a breakout, we had a pullback, and then we had a retest. We're making new short-term highs, and that new short-term high is sitting at about 4,225. Now, we've started a correction from overbought territory as well. And similarly to the Nasdaq, we are looking for this pullback to end, short-term correction to end at one of our level support, either this dotted trend line or initial support there, 4,105. I want to see the price get to one of those levels and just tick back a little bit before looking for long entry and targeting a move back towards that 4,225. We're not looking at shorting from these highs at this point in time because we are expecting that longer term uptrend on the S&P 500. Moving over to Europe. Now we have had our pullback from new high territory. We've had a bit of a rally and we're on a bit of a sideways consolidation in the short term. Longer term trend does remain intact. We don't have our 200-day simple moving average, but the price is trading above that on this. And we can see that this trend line is also giving us some guidance. Now the price does look to be forming a bit of a bullish reversal here. Today's candle is not complete as of yet, but we do see a strong close above at least the halfway mark of that big red candle. We can say that we have a bullish reversal off our level of support, in which case we start targeting initially 16,100. If we get through there, we're looking at 16,330. In that situation, we use a close below that trend line support. That's a trailing stop loss indication for that trade. FTSE 100 is in a broad sideways consolidation. So that longer term trend is no longer considered up. We've seen the price whipsawing a bit through that 200-day simple moving average at this point in time. So we are looking at trading between the levels. Now, when we had last week, we said that if we have a break below there, we'd be looking towards 7,410. We haven't quite got there. The price has moved lower, and now we are trying to reverse there. But that still remains a target on the downside. And I think if you are a bull and you want to get long, you want to see this price trading back above that 7,560 level before targeting a move back up towards 7,700. At this point in time, we don't have a reversal. We have a bit of a small-bodied candle here, so a bit of an indecision or non-commitment at least to a direction at this stage. There's still a lot of the day to go, but we have had that breakout to the downside, and we are still targeting 7,410 in the very near term. In a nice bullish reversal, that might be a range trade type opportunity, looking for long entry and a move back towards 7,560. Moving over to some commodities now, and starting off with Brent crude. Now, we have for quite a long time been suggesting that that longer term trend bias is still down, despite what we've seen as a bit of a medium term range bound price environment for Brent crude. Over the very short term, we've had this rising wedge type formation, and as a function of this recent move down, it was considered a bearish chart pattern, has played out as that pattern would assume. So we've had the downside breakout, we've had our move towards support. We are starting to move into oversold territory, but certainly if we start closing below $72.2 per barrel, there is a target there a little bit low of $69.50. And if you want to be conservative, maybe this low here at about $70 a barrel would also be a target. Now, while we're moving in oversold territory, we could end up with some type of bullish reversal at around here or at our lower level. Consider a rebound. Because of that longer term uptrend, we wouldn't look at short by getting long into that rebound. We'd rather wait for that rebound to play out and then look for another bearish reversal, as we have been doing in the past, to look for short entry until such time as at least we're trading above this 200-day simple moving average, which is our gauge of longer term trend. Now, gold has found a support at a confluence of the that red channel support and that horizontal line about 1945. and we have had a bit of a bullish reversal off of that, and that targeted a move towards 1980. Now, it's fallen just short of that, about $5 or $6 per ounce short. And that move does seem to be faltering at this point in time, but we still really just moved out of oversold territory. Our longer-term bias for trades on spot gold remains to the long side at this point in time, and we do deem what's happened here recently as a short-term correction of that longer-term uptrend. We need to start trading below that 1934 level. If we do, this current move fails and we start trading below that, and that's where we consider failure level for those that might be long into gold right now. Wouldn't be looking at short because we're still far above that 200-day simple moving average here. We'd wait for the price just to find the next level of support, tick back, and then look for long entry again. So long bias still considered on gold. We have had a bit of a short-term reversal. It is looking like it's losing a little bit of momentum in the very, very short term. Last but not least, still with the precious metals here, we are looking at spot silver. Now, that medium-term trend or short-term, we've had a correction of this longer-term uptrend. Price has found some support just above that 2250 level, had this bullish engulfing, and we have started to rally, and that's taking us to, well, suggesting a target on the upside of 2430 on spot silver. Now, if you were fortunate enough to catch this, you might want to consider trailing up your stop loss to a 1 or 2 day low, depending on your threshold for risk. But certainly, if you've got a good entry there, you do want to just, maybe take some risk off the table, reduce the amount of risk in the existing trade. If we can get that stop loss to entry, then it does become a risk-free trade and definitely a much more favorable trading conditions. All right, that's all the charts from me. Sean Murison, Senior Market Analyst at IG South Africa. Do watch out for that ADP data out this afternoon, obviously as a precursor towards Friday's non-farm payroll data.